In this video, I'm going to talk to you exactly how the Fed decides what to do with the interest rates, how they decide when to do quantitative easing or tightening, how you can profit off that, and how you can find these metrics for free online. Now I should you listen to me. I was mentored by the Institute of Trading and Portfolio Management ex-Goldman Sachs traders Anton Creel and Edward Scheck, and the portfolio manager of Dragonstone Capital based out of Singapore, managing $3 billion. In addition to that, I have completed multiple specializations and have also created my own algorithm which is running in the markets, which has generated me over a 7,500% return over the last 15 years, all of which you can find in the bio. The Fed's mandate is to regulate only two things and two things only. Keep inflation low at their target 2% and keep unemployment numbers low. That's the Fed's mandate. That's the only two things they really care about. Everything else is just fluff. The Fed doesn't care about meme stocks or crypto of all things. The Fed only cares about the core CPI number and the PMI report and unemployment and jobless claims. Those are the only things the Fed looks at and cares about. Core CPI is just a measure of inflation in the economy. Core CPI basically just means minus food and minus energy, because food and energy are like hyperinflation. Price in food and energy fluctuates like crazy. So core CPI is just everything minus those two. That's what the Fed looks at, and they have core CPI target. PMI is the ISM's PMI number, which is the Purchasing Managers Index. It's a number and it's a survey which comes out every month within the first week. It tells you if businesses are expanding in the US. Are we getting new orders, business activity, and inventory management? What you want to be looking at is new orders. Are businesses actually getting new orders? And yes, you can get this for free online. The PMI report is available for anyone who searches for it. A PMI number greater than 50 shows the economy expanding, and a PMI number below 50 shows the economy contracting. There's been a great statistical analysis done on this. The correlation between the PMI number and GDP is 85%, and it's forward indicating. So the PMI above 50 shows an economy expanding, and it is a forward-looking indicator which you can use to successfully predict whether GDP is going to go up or down. Don't take my word for it. Alan Greenspan, the former Fed governor, said that if everything else was locked down and he had access to no data, the only thing he'd look at to judge interest rates and QT/QE is looking at the PMI number. And it really doesn't take a rocket scientist to really understand what's the regime right now. We know that the Fed is going to cut interest rates to stimulate the economy because we've had a relatively slow GDP number. We're going to get rate cuts to stimulate the economy. A rate cut usually means that inflation is probably going to go higher. So we're going to get hyperinflation. We're going to get some economic stimulus. And these assumptions, these reductions, I'm not a rocket scientist, right? Anyone can come up with these assumptions. It's really common sense. So we're getting hyperinflation and we're getting rate cuts, which are two great things for stimulus to the stock market. And because we're getting hyperinflation, that's going to result in gold prices going up a lot. As everyone's saying, Ray Dalio, Ken Griffin, everyone's dumping money into gold right now. Just look at the gold miners, Newmont Gold, off the charts. Finance isn't overcomplicated, it's structured common sense. Attached below in the description, I have a crash signals playbook which tells you all indicators which successfully predict an economic crash, extracted from a Bloomberg terminal worth $25,000 per annum, and metrics and indicators which hedge fund managers and professional traders obsess over. That playbook, that list, I have attached in the description for free.